In our interconnected world, distant events can quickly reshape economies, politics, and daily life. This week, high-stakes negotiations, technological breakthroughs, and moments of human triumph have shifted the global landscape. From trade deals and humanitarian crises to sports victories, these stories reveal the forces shaping our collective future. Understanding these developments is essential for navigating the challenges and opportunities ahead. For months, the threat of a US-EU trade war cast a long shadow over the global economy, with both sides bracing for a confrontation that could have sent shockwaves far beyond their own borders. The specter of escalating tariffs loomed large, threatening to cripple industries, shutter factories, and trigger a domino effect of job losses and economic downturns across both continents. But this week, in a dramatic turn of events at Trump's Scottish resort, negotiators from both sides hammered out a last-minute agreement, averting disaster and setting a new, if uneasy, baseline for transatlantic trade relations. The deal imposes a 15% tariff on most EU exports to the US, a significant increase from previous rates but still far less severe than the 30% tariffs that had been threatened and feared by businesses on both sides of the Atlantic. Key industries, such as German automakers, which employ hundreds of thousands and are vital to the European economy, are spared the harshest measures, allowing them to continue exporting vehicles to the US with only moderate new costs. Meanwhile, sectors like aircraft parts, which are deeply integrated into both economies' supply chains, and high-tech industries such as semiconductors, receive crucial exemptions, ensuring that innovation and technological cooperation can continue without major disruption. In return for these concessions, the EU has agreed to purchase $750 billion worth of US energy over the next several years, a move designed to strengthen energy ties and reduce Europe's dependence on other global suppliers. The agreement also paves the way for $600 billion in American investments in Europe by 2027, promising new opportunities for growth, job creation, and deeper financial integration between the two economic giants. However, not all issues have been resolved. Some US tariffs on European steel and aluminum remain in place, serving as a reminder that significant disagreements still linger and that the path to full resolution will be complex. President Trump hailed the deal as a historic breakthrough, touting it as a win for American workers and businesses. European leaders, however, offered a more nuanced response. Some called it a necessary compromise to avoid economic catastrophe, while others lamented the concessions made, warning that Europe had lost ground and would need to fight hard to protect its interests in future negotiations. The agreement underscores the difficult choices leaders face as they try to balance national priorities with the need for global stability and cooperation in an increasingly interconnected world. While the immediate crisis has been averted, the deal is only a first step. Ongoing negotiations will be essential to address unresolved disputes and to build a more durable framework for future trade. For now, this agreement represents a fragile truce, an uneasy peace that could be tested at any moment as both sides continue to navigate the complex realities of global trade. Markets responded to the US-EU deal with a collective sigh of relief. After months of uncertainty, investors finally saw a path forward. The announcement sent ripples through trading floors across the globe as the fear of a full-blown trade war began to fade. European stocks surged almost instantly, with the euro strengthening against major currencies. Investors interpreted the deal as a sign of renewed stability and confidence in the European economy. Germany's DAX and the Stoxx 600 both soared to record highs, reflecting widespread optimism that a recession had been averted. The mood in Frankfurt was jubilant, as traders celebrated what many called a turning point for the region. But the deal's impact wasn't limited to stocks. Energy prices climbed as Europe agreed to import more US oil and gas, signaling a shift in global energy flows and raising questions about long-term supply security. Yet not everyone was celebrating. The 15% tariff remains a significant blow for European exporters, especially in industries like automotive and machinery. Analysts warn that these new costs could slow growth, with some predicting a potential $2 trillion hit to global output by 2027 if trade tensions flare up again. The European Central Bank has already responded by lowering its growth forecasts, citing ongoing uncertainty and the risk of further disruptions to trade and investment. For the US, the deal is seen as a strategic victory. It opens up lucrative EU markets for American goods and sets new precedents for future trade negotiations, especially as both sides look to counter China's growing influence in global commerce. But this agreement is about more than just tariffs and quotas. It represents a fundamental shift in the rules of global trade, with new standards and frameworks that could shape economic relations for years to come. Both sides now face the challenge of adapting to a new reality. While the immediate crisis has been averted, businesses and governments must adjust to new regulations and shifting supply chains. Still, for now the world has dodged a major economic bullet. The next challenge is clear: making this fragile stability last, and ensuring that today's relief doesn't turn into tomorrow's uncertainty. As the US and EU reached their deal, the world's attention shifted to another high-stakes negotiation, one that could reshape the global economic landscape for years to come. In Stockholm, US and Chinese negotiators gathered in a tense atmosphere, seeking common ground to halt their escalating trade war. The stakes were enormous, with both sides aware that failure could send shockwaves through the world economy. The talks zeroed in on extending a fragile tariff moratorium, a temporary pause that would buy both sides precious time to address deeper disagreements. Negotiators hoped for a 90-day window, just 3 months, to hammer out a more lasting solution. With every passing day, the pressure mounted as businesses and workers on both sides braced for the outcome. Currently, the US maintains steep tariffs, up to 30%, on hundreds of billions of dollars worth of Chinese goods, from electronics to clothing. China has responded in kind, targeting American exports and causing ripple effects across global supply chains. Factories have slowed, shelves have emptied, and workers in both countries feel the strain. But tariffs are just the beginning. The two sides are also clashing over technology, semiconductor exports, access to rare earth metals, and the fate of companies like TikTok, which has become a symbol of the digital rivalry. A truce, even a temporary one, would offer much-needed relief to industries, workers, and investors who have endured months of uncertainty and volatility. Yet beneath the surface, the conflict is about more than just trade. It's a contest for technological dominance, with each side determined to shape the future of innovation. If negotiators succeed in Stockholm, it could open the door to a historic Trump-Xi summit, raising hopes for a broader, more durable agreement. The news sent markets in China and Hong Kong surging, as investors bet on a breakthrough that could restore confidence and stability. But beneath the optimism, uncertainty lingers. The situation remains fragile, and a single misstep could unravel months of progress. Any deal struck here would reset the terms of global trade, affecting everything from shipping routes to the price of everyday goods. The world's leaders, journalists, and citizens are watching closely, aware that the outcome could ease a major source of international tension. For now, the world waits, hoping that this fragile truce will be more than just a temporary pause, and that it might mark the beginning of a new era in global cooperation. While leaders negotiate trade, Gaza faces a worsening humanitarian crisis. Israel has resumed limited aid deliveries after international pressure, with airdrops coordinated by the UAE and Jordan. The UN warns that nearly all of Gaza's 2.3 million residents face acute food insecurity. Airdrops offer some relief, but only sustained land access can prevent famine. Ceasefire talks between Israel and Hamas remain stalled, with aid access a key bargaining chip. The crisis tests the world's ability to respond to suffering and demands urgent diplomatic action. Political moves like the UK's recognition of Palestinian statehood add complexity to the situation. The fate of millions depends on the interplay of diplomacy, aid, and political will. The US-EU trade deal has boosted European markets, but investors remain cautious. All eyes are on the US Federal Reserve's upcoming meeting and jobs data, with possible rate cuts on the horizon. Corporate earnings are mixed. Heineken reports a slight sales dip, while banks like Barclays and HSBC show resilience. European banks have outperformed, but autos and pharmaceuticals struggle with tariffs and inflation. Half of companies in these sectors report negative impacts from trade disputes. The new 15% tariff means export-oriented firms must adapt quickly. The economic outlook depends on trade policy, central bank moves, and industry resilience. Optimism is tempered by the risks ahead. The path forward is uncertain, but adaptability will be key. Samsung has landed a $16.5 billion deal to supply next-gen AI chips to Tesla through 2033. The chips made in Texas will power Tesla's autonomous vehicles and AI projects, marking a major leap for both companies. For Samsung, it's a win in the global chip race. For Tesla, it secures the tech needed for self-driving cars and robotics. The partnership boosts U.S. manufacturing and reduces reliance on overseas supply chains. Investors cheered the news, seeing it as a sign of innovation and strategic collaboration. This alliance exemplifies how global partnerships can drive technological revolutions. The ripple effects will shape the future of mobility and AI worldwide. Amid global tensions, England's Lionesses delivered a moment of unity and pride by defending their European Championship title. Their dramatic penalty shootout win over Spain marked the first time an English team has won a major trophy on foreign soil. The victory shattered barriers for women's sports, inspiring a new generation and attracting fans and sponsors. The Lionesses' skill and resilience set a new standard for football, and national morale soared. Their triumph is a powerful reminder of sport's ability to unite and inspire. In a world of conflict and uncertainty, such moments of joy matter deeply. The Lionesses' roar echoes far beyond the pitch. This week's events reveal a world bound by shared challenges and opportunities. The US-EU deal, US-China talks, and the Samsung-Tesla partnership show how diplomacy and innovation shape global stability. Technology and trade cross borders, linking economies and lives everywhere. The Gaza crisis reminds us that our interconnectedness brings shared responsibility for human dignity. From financial markets to football fields, the human spirit drives progress. Every story is a thread in the global tapestry. Understanding these connections is key to navigating the future. In a world in motion, every decision matters.